Tesla is down about 2% today following some bad economic data that came out, as well as some company-specific news. We have the latest for you in this video, so buckle up and let's get started. But before we do, if you want to make more money, if you want to reach financial freedom as quickly as possible, or stay up to date with everything happening in the markets as well as with Tesla on a day-by-day basis, we are your place to be. Hit the subscribe button as well as the like button, and now let's go ahead and get into all of this information. Tesla is seeing some mixed news today, some good, some bad, but the big story that is really affecting the markets and affecting Tesla is the economic data. It came in well above expectations. The ISM Services PMI for the month of June came in at 53.9. You were expecting a reading of 50. So it looks like services are stronger than expectations, but Jolt's job openings did miss. They came in at 9.8 million. You were expecting about 9.93 million. This is actually a positive thing. This is a positive development to see less job openings. That's good. That's constraining the labor market. But the big story today is ADP employment change, which came in at 497,000 job ads for the month of June. You were expecting 228,000 job ads. This was more than double the expected job ads number. This beat to the ADP employment change is causing the 2-year bond yields to now break above 5%, currently sitting at 5.05%. This is the highest level that you have been at in over 5 years. You have to go back to 2006 to see the 2-year bond yield at this level. The 10-year bond yield as well is sitting at 4.06%. This is close to the highest level that you have seen in years now. You're a little bit off of that, but it's up there. And you could see you're on this upward trajectory. Now, the 10-year bond yield is really what dictates your mortgage cost, your auto financing, things of that nature. When the 10-year yield rises, that's where borrowing fees rise as well. This is not good for a recession outlook. This is very recessionary. When the bond yields go higher, it's going to mean less capital getting loaned out. It's going to be less people able to afford to take on new loans. But all things are not doom and gloom for Tesla. Tesla just got a price target increase by Bank of America. They increased their Tesla price target to $300 per share, following the trend of similar analysts. It looks like people are betting on that $300 price tag for Tesla, and Tesla could exceed that in the very near-term future. John Murphy, the Bank of America analyst that just upgraded Tesla's price target today, says that he's changing it because of updates to news estimates and some alterations to some valuation multiples. His new price target works out to 25 times his estimated 2025 earnings before interest, taxes, depreciation, and amortization, or EBITDA. His old target worked out to 20 times forward year EBITDA. These analysts, even the bullish analyst, don't understand Tesla. They don't understand the growth of Tesla. They don't understand the energy business. The energy storage business is going to be massive. Even by 2025, the revenue on that's probably going to be over $10 billion a year, right? The car business, you should be seeing robo-taxis by the time. If you're not, you're going to see full self-driving, hopefully far along. You're going to have the Cybertruck out for a long time. You're going to have advertising that's going to have likely happened for a long time. There's going to be so much demand for Tesla. Tesla's not going to be able to keep up with that demand. And you're going to give Tesla a 25 times multiple? Are you serious? they're going to be growing likely over 50% at that point. That's my ultimate bet that I'm making. And Apple is negative year over year, but that's currently trading at over 35 times forward earnings. But you're going to give Tesla 25 times in 2025. Just the whole arguments don't make any sense. Now, markets are forward looking. So when you see so many people caught off sides, so many shorts caught off sides, when you see the option activity, the way that we're seeing it so bullish, markets are forward looking. They're looking at the Cybertruck and what that's going to do for Tesla. Even if these analysts, this analyst is bullish, but even if the bearish analysts want to point out valuations or anything of that nature, the valuation's cheap. Markets are already looking past that. And that's what a lot of analysts just don't realize. We are also seeing some very bullish option activity yet again for Tesla, considering Tesla is down over 2%. Take a look at some of these large orders coming in. You have a January 19th, 2024 280 call with a break even of $323.75. This trade expires within the next 5 months or so. And they're betting $2.19 million in this single trade that Tesla is going to well past breakout of $300. You're also getting a January 17th, 2025 350 call with a break even of $403.75 worth $2.69 million. And you are seeing a put to call ratio of 0.80 with volume of 77% to the call side. So you are getting more bullish option activity than not on these red days. That does suggest to me this is very much a buy the dip kind of mentality. If you were not in Tesla, well, today looks like a good day to add some exposure to any potential upside in Tesla. Short sellers remain stubborn. They are trapped. They do not want to cover on these short positions with the losses that they are seeing over $15 billion now. You're currently seeing the estimated value of short positions in Tesla at $26.16 billion, up 60% in the last 3 months, and you're still sitting at about 96 million shares sold short, which is the highest level that you have seen since January 15th of 2021, as a lot of you by now already know. In other news, Cathie Wood sold more Tesla stock while buying shares of Meta. This, ironically enough, every time Cathie is selling, it tends to lead to a positive price action move in Tesla stock. Cathie Wood sold 28,267 shares of Tesla, valued at $7.98 million on Wednesday, when Tesla was $282.48 per share. A lot of people give Cathie a hard time on this, but still, at the time of recording this video, Tesla is increasing its weighting in ARK Invest because Tesla continues to go higher and higher. The last time we reported Cathie Wood's portfolio, which was the last time she sold Tesla, her weighting was around 11.7% solely in Tesla. Well, following the latest rally in Tesla, it's now at 12.23%. So to see some selling from here would not surprise me, or continued selling, because Cathie likes to stay around 10% allocated to single stocks. She was buying Tesla when it was $100 per share, $150. The stock's now at $280. It's went up a lot as far as the weighting in ARK Invest, so she's reducing exposure as any good fund manager does. But recently, this has actually been a bullish phenomena for Tesla. The National Highway Traffic and Safety Administration presses Tesla for more records in autopilot safety probe. This is following a probe that started on autopilot in 2021 after it identified a string of crashes in which Tesla vehicles crashed into first responders' vehicles. They go on to say there was about 21 fatal crashes that had full self-driving being used at the time. Now, not to downplay any fatal crashes, that's a tragedy anytime it happens, but full self-driving is still safer than your other assholes out on the road. That's a fact here. If it was not, maybe this would hold a little bit more validity. But as of right now, if Tesla fails to supply the federal agency with information about its advanced driver assistance systems, which are marked as autopilot and full self-driving and FSD beta options in the US, the company faces, quote, civil penalties of up to $26,315 per violation per day, with a maximum of $131.5 million for a related series of daily violations, according to NHTSA. Now, this is not affecting Tesla's stock today, I don't believe. 131 million, I mean, in the grand scope of Tesla's revenue of expected to be about 24 billion, it is a drop in the bucket. Not a huge deal either way this thing goes. Obviously, you want to see Tesla comply with this so we don't get any restrictions to full self-driving, which I do expect Tesla to comply with this. But I don't think this is affecting Tesla's stock today. Tesla's 13F filings that we are getting so far are pretty dang bullish. Now, Q2 ended on June 31st. Typically, you get a lot of these 13F filings coming out the next 2 weeks after the end of a quarter. So we're going to get a lot more 13F filings, and some of the biggest ones, the most important ones, are not out yet, like Vanguard and BlackRock. But what we're seeing so far, pretty encouraging. So far, no firms have completely sold out of Tesla, and about 60% of them have actually increased their positions in Tesla. Some notable ones would be Prentice Wealth Management that increased their position by 36%. Apella Capital LLC increased their position by 106%. And Centra Asset Management LLC increased their position by 63%. Park National Corp also increased their position by over 50%. This brings Tesla to an institutional long position of 49% in Tesla. So institutions are long 49% of all Tesla shares outstanding. So even when you think of this in terms of shorts, there's not that many shares that are actually out there. When you consider retail owns a chunk of Tesla, Elon owns 20% of Tesla, and institutional investors own almost 50% of Tesla. This could make for a very dramatic short squeeze after earnings. Now, earnings is going to be the next big catalyst, and margins, in which I don't expect margins to be a negative for Tesla. In fact, I think margins are going to come in better than expectations. But from now until earnings, economic data is really going to be the driver of our markets, and it can affect Tesla stock as we are seeing today. Tomorrow's economic data is the non-farm payrolls as well as the unemployment rate, both of these for the month of June. Now, what we seen last month was the non-farm payrolls beat expectations. You seen 339,000 job ads, and the unemployment rate went from 3.4% to 3.7%, and that had a lot of people scratching their heads. How do you add so many jobs, but the unemployment rate went up so sharply? Well, there was really never an answer for this. Well, coming tomorrow morning, we're expecting 225,000 adds to the non-farm payrolls for the month of June, and the unemployment rate to fall one tick down to 3.6%. As we're seeing today with the ADP employment change, if these numbers come in strong, if the non-farm payroll number comes in strong and the unemployment rate does fall, that's going to be a very negative thing for bonds. That's going to be negative for the Fed, and they're going to have to raise rates higher than expectations. Now, if the unemployment rate does shoot up, that could be a positive thing for the markets, but believe it or not, the markets only care about a recession at this point. And if the unemployment rate goes higher, you're looking at a recession. Now, if we look at Tesla on a technical basis, Tesla got rejected on the high-end wick right at about $280 per share. This is the downtrending line that I have had drawn out for a while now. This is connecting the peaks that you've seen back here in 2021 and early 2022. This break above, which I expect to happen, above $280 per share, at least that's where the line is today. Well, if you break 280, Tesla's going to have a lot of momentum to the upside. Now, this line that I also drew out yesterday, this diagonal line right, this horizontal line right here, you can see, I mean, the stock's currently trading right at that level as support. And this is the prior low wick of yesterday. So you are getting some very encouraging signs from the technicals, and if this pattern holds up throughout the end of the day, this is going to be a hammer candlestick pattern. A hammer candlestick pattern literally looks like a hammer. It has a long low wick and this short middle trading range, and then it has a higher wick. What this says is that the shorts or the sellers got exhausted at the lows, and this stock in question, which is Tesla, recovered towards the high by the end of the day. This is a sign of a reversal and for higher prices to come. Straight from Google itself, what does a hammer candlestick indicate? The hammer candlestick is found at the bottom of a downtrend and signals a potential bullish reversal in the market. A hammer is a candlestick pattern which a stock opens, then moves a lot lower during the day, then rallies back near the opening price. And that's exactly what you have seen so far on the day. Tesla's RSI is also back to 67.78. Now you're under 70. So you're no longer in overbought territory, but Tesla stock remains just a few dollars away from the high of this cycle. That's what you want to see, is this RSI resetting to allow room to make that big upside move. This is a positive development. The MACD, also, you're seeing the CCC line almost, it looks like breaking above the signal line today. Now, this shows positive momentum. This shows a bullish reversal as well. When this yellow line is above the blue line, that's positive, right? Especially when it breaks above, let's put that smaller, especially when the yellow line first breaks above the blue line, that is typically a good sign for a stock. As you can see, that happened back here on May 5th when Tesla stock was around $170 per share. This lasted up until June 23rd when Tesla stock fell 3%. The following day fell 6% and then bottomed out. But the MACD, this yellow line, stayed under the blue line until now. Now it's back above the blue line just slightly here today. This should indicate another uptrend and newer highs of this cycle for Tesla stock. So any dip that we get in Tesla stock from here is definitely a buy the dip moment in my personal opinion, as we approach $300 heading into earnings and then explode higher after that. Keep in mind, I'm not a financial advisor. Don't listen to anything that's said in this video, but we've been right so far, and hopefully that streak does continue. So that's going to do it for this video. Hit the like button and subscribe to the channel on your way out. If you guys want to get yourself some Tesla merch, down below in the description of this video. Sign up for Webull, get yourself 15 free stocks, link down there as well. And if you guys want to come trade with me live in real time every time I make a trade, link down below. And you guessed it, the description of this video. Enjoy the rest of your day, and I will see you in the next one.